Welcome everybody to another Mariner Wealth Advisors webinar. My name is Jude Grimaldi. You may have seen me if you've watched any of our webinars this year in the past. I am your designated host this evening. I am one of the members of our practice management team here at Mariner. Now, today's topic, managing emotional investing. This is going to be a really exciting topic. I have some very special guests here as well that are very experienced in this topic as well. Just a couple housekeeping items. We do want this session to be as engaging as possible. So if you do have any questions throughout the webinar, go ahead and submit them in the Q&A function that's at the bottom of the webinar there. Now, I will try to get to them during the session itself, but if I don't happen to get to it, then we'll definitely make our best effort to get to them at the end of the session here. And then if there is anybody that would like any closed captioning, there should be an option in your Zoom as well. You can click the little CC button if you would like some closed captions there. All right, and so we can get started. So back to our topic, managing emotional investing. This is a topic that, as I mentioned, I'm very excited about. I studied psychology in college, and being in the financial services industry, this is, probably my favorite subject to talk about. There's so many things that encompass this and so many things that impact the decisions that we make financially that are fully, we can fall back to our emotions. The psychology behind everything, behind investing, behind, making decisions in our financial plans and wealth management as a whole. So, I think this is going to be a really great session today. So I am joined today by Drew McDowell, who's Managing Director and Senior Wealth Advisor here at Mariner, as well as Christina Lynn, one of our practice management consultants on my team here. And so I'm just going to ask you both to just do a quick introduction of yourselves and talk a little bit about your experience with this subject, with, emotional side of investing, psychological financial planning, and just, the behavioral behind everything. So we can go ahead and start with Christina.
Well, thanks, Jude, for the introduction. I'm excited to have this conversation with you and Drew today. So I'm a certified financial planner, and I had a mentor that always would tell me that it's not about the money. And what he meant by that is that, so many of the obstacles that we run into with our finances, they may appear on the surface to be very financial oriented. Maybe it's an interest rate, rate of return, inflation, that sort of thing. But really below the surface, it's not about those technical aspects. It's about things that are happening on the interior. It's not actually about the money. It's about what's going on in our lives and what is how we're a little bit of background on me. I'm just finishing up my dissertation in behavioral finance. So this is a subject that I'm incredibly passionate about and excited to talk to you about today.
Awesome. Thanks, Christina. There is a little bit of a lag from your end. So if that continues, I may ask you just to shut the video off just temporarily to see if that fixes anything.
Sounds good.
I'll let you know. Awesome. So Drew.
Hey, Christina, don't worry. It was probably better for total views if I shut my video off just in general from, just a general standpoint. So don't worry about it at all. But no, thank you, Jude, for the intro, and I appreciate seeing a lot of our local clients on the attendees list. So appreciate you all being here and the opportunity to chat a little bit about a topic that's near and dear to my heart. I think Christine hit the nail on the head. Quite a few folks come at investing from a hyper-rational, hyper-technical standpoint, and we do want to have that. We want to have that built into our financial plans. We want that certainty. We crave it as individuals. But at the same time, I think it's oftentimes a motivation below the surface that is emotion driven. And so, a lot of the work that we do here in our office is more education based than anything else to give our clients the confidence that they need in order to make those rational decisions down the line. So I think Christina hit the nail on the head for sure.
Yeah, definitely. I think that you brought up a really good point, is giving somebody the confidence to make these decisions, especially with the environment and the climate of the market today. It makes everybody a little bit nervous, including myself. And I think that, learning more about what drives these decisions that we're making is so incredibly important.
Most definitely, most definitely.
So I'll go ahead and I'll start the first question here. So this one I'll direct first at Christina, but Drew, feel free to jump in at all. So from your perspective, what influences financial behavior?
Yeah, so I gave you a couple of like big words that we can go over that I think sum up what influences irrational financial behavior. And the first one is financial comfort zone. So what is that? That is our daily encounters of what happens in our financial lives. You can think of it as like an economic equilibrium. We get used to a certain cadence in our income and expenses. And when something changes with that, whether for the good or for the bad, it pushes us outside that financial comfort zone and we get uncomfortable with it. It causes us anxiety, our well-being drops. And so when something is happening, whether it be in the market with your investments, the performance, inflation, it makes us uncomfortable because it pushes us outside of our bubble. And so that financial comfort zone is the first thing that I wanted to point out that influences our behavior. Another piece of it is what I refer to as financial socialization. And what that is our financial experiences, mostly when we grew up, how we saw our parents handle money, how we saw our relatives handle money, their experiences and the way they reacted to that. We don't necessarily connect those dots in our thinking, but when you actually take a moment to reflect on it, you might draw some comparisons between how you handle money and how you saw money being handled growing up. Right. And so when things happen in the marketplace with investing, or your financial advisor brings up a new idea or makes a recommendation that is contrary to those experiences, that's a factor that we need to consider. It helps us make sense of why we are reacting the way we are.
Right. That's such a good point. And I, as I get older, I see more of my parents and myself as I get closer and closer to getting old, and my financial decisions are exactly the same. I see that relationship so much. And it's a little intimidating, I will say that, but it's interesting to hear you say that because I see that in myself.
Oh yeah. My daughter always says that, like, Mom, I'm not going to be like you at all. And I just say, you wait and see. I am so much like my parents. I wear like the same kind of sock style as my mother. Do I like have the same mannerisms? It's crazy. And it becomes more pronounced as we get older. And, right. We just don't always think about it in terms of the money piece of it because, that's not something that we normally think about. We're just used to our daily encounters with finances. We don't take time to reflect on that, but yeah, it's there when you look for it.
Yeah. I mean, that's definitely something that could potentially push you outside of your comfort zone if it intimidates you. So I guess I will move into Drew. Are there a couple of areas that you see people, when you're thinking about wealth management, become emotionally attached to or get emotionally hung up on? Like, what are the big areas that you're seeing people, that is causing a rift in the decision making?
Oh, I mean, there are quite a few, and so it's certainly it's always an interesting conversation, and I say it with a kind of a cheeky smile. Because I think we all, if we take a step back from ourselves, whether we're the advisor or the client, we can kind of rationally see like these are emotional decisions that we're making if we kind of, step away from ourselves. But the irony is it's so difficult to do that. Obviously we're all our own worst critics because we only live inside of ourselves. So the most common factors that we see when it comes to emotional decision making usually involves an individual asset of some kind. We are lucky enough to live here in Destin, Florida, the beautiful deep South. We have quite a few folks who are legacy Coca-Cola share owners because Coca-Cola was a huge individual stock that you could buy nearly 100 years ago, and the headquarters is actually about a couple hours away from here. So quite a few folks have what we call those family or legacy positions that, you know, their grandparents owned and then passed them on to their parents and then passed them on to folks who are retirees today. And to Christina's point about that kind of inheritance or legacy style thinking about money in that same way, and I'm not picking on any individual positions. I know compliance is going to cut that out, so I want to make sure that's noted. Don't buy anything because of what we talk about today. I just use that as an example of those legacy positions that we carry with us. And you know, we always like to say in our office, the stock doesn't know that you own it. The market doesn't know that you're a participant. The rental house that you own doesn't know that you own it. And so we become emotionally attached to assets that have been successful for us. And, you know, another good example is that kind of success bias when it comes to some positions. I think, you know, we all can read the studies online that show that the average investor underperforms the market. The average investor is not necessarily a good investor, but they can all, you know, average clients can always remember those great positions, those great ideas, those one-offs that went really, really well. And we become emotionally attached to that. And so that confidence bias that arises from those positions can then build into an emotional attachment over time. And, you know, to Christina's point, I think we have to be very cognizant of the fact that our biases travel with us over time, and we become more like the people who trained us in our youth. And so the last thing I always talk about is that falling in love with an inheritance or falling in love with an idea. You know, we have to be malleable because the world changes. I think we could all agree that, you know, the folks who were, and I'm going to talk about an individual company now. One of the most popular companies at the turn of the century was a horse and buggy maker. Well, they don't exist anymore because we all drive cars. And so I think that we have to be evolutionary in our investment thinking, and that requires a lack of emotionality about certain positions and certain sectors of the market. So that is a very common hang up that we see in our practice, and all of it's education. All of it is just saying, hey, let's think about this rationally, let's take a step back and come to a good understanding together.
Yeah, and it's interesting you brought up the evolution, and that's something that, you know, I work with advisors every single day, and I work with our advisors all across the country. And one of the big things that I like to talk about is, you know, understanding the industry and understanding how the industry evolves and making sure that you stay on top of that, because, you know, you're going to end up falling behind if you're not on top and you're not changing with the times as well. And I think that that's no different as far as, you know, investing goes, of course, because the decisions that we make are really going to impact that long term. And if we do end up falling behind, you know, we're going to be behind for the foreseeable future. Now, you brought up another point about different biases, and I think that that is, you know, really interesting terminology and something that, you know, I believe impacts these financial decisions as well. You know, Christina or Drew, can either of you speak a little bit more on the different biases that people have, or the cognitive biases, or whatever it may be?
For sure, Jude, and I apologize. Oh, go ahead. Sorry.
No, go ahead. You take it, Drew, and then I'll chime in.
No, I was just gonna say I'm the lagging one now, so I feel terrible talking over you. I apologize. I thought Jude was talking to me. Christina, you're the expert. You're working on this. You kick it off, and I'll go to the next one.
Okay. So there is just this laundry list of different biases that we all have. I mean, you brought up the confirmation bias, Drew. There's the recency bias, which just means we tend to think just in terms of what's happened more recently, and we don't necessarily have a broader historical perspective on it. There's also anchoring biases where, you know, a good one is we tend to focus on like what happened during the 2008 crisis because that was such a major event and it was life-changing for many people. And so you make decisions based off that one event that was, you know, could be looked at like an outlier versus, you know, the long term, what should be expected over the long term. So I'll pass it back to you, Drew. Then I do have one more thought on this question beyond the biases as well.
Definitely. I just think that, to your point, Christine, I think that the 2008 experience is probably the most impactful bias that many retirees and investors today are familiar with. And everyone has heard the phrase, you know, this time is different. And we say it tongue in cheek because it can actually mean both things. It can actually mean, no, this time is different. And then if you're trying to make a different point, it can actually mean, no, the environmental changes or the setup for 2008 is very different than what we might be experiencing today. And I think we use these terms to be very flippant, or these phrases to make ourselves feel better, because again, we have that emotional reaction to, I feel the same uncertainty or fear or consternation that I did in 2008 today, or maybe in 2020. And I think it's really, really important to not be anchored, to your point, to those past emotional experiences, because the world does change. Things are different than they were in 2008. And so I think that always keeping that in the forefront, to your point, is an excellent thing for the lay investor, professional advisor, whoever might be watching today.
Mm-hmm.
All right, I'll take the microphone back. I had one more kind of like wrap up comment for that. So I try to not talk about biases too much, because really it's just labeling of a behavior. And in a way it does help to like normalize it. Oh, I'm not alone in thinking that, or it may be helpful in becoming self-aware, like, oh, I didn't realize I was doing that, and that wasn't, the right way to be thinking about this. So, I mean, it can be helpful in thinking about it, but I think what's more helpful is to, rely on having a team of professionals around you to help you with that, because it's so difficult to be self-aware of when this is happening. And, financial advisors we experience this as well. That's why we work in a team to bounce ideas off of, one another, because we may not be thinking or seeing what somebody else is. And so, don't be an island on your own. The more, professional advice that you can get with leaning on your financial advisor to become aware of these things, the better.
Yeah.
Okay, so did you have a thought on that, Jude?
Oh, no, I was just going to say that's a really great point. And, that's exactly why firms like Mariner exist. And I say this throughout every single one of our webinars here, is that if you do have any questions, reach out to your financial advisor. That's exactly what they're there for. And, it's not just that financial planning aspect of it. They're there to help you think about wealth management conceptually and think about your entire life, because there's so many other things outside of just the technical finances that encompass financial planning and wealth management, which is exactly why we have this topic today that we're talking about.
Yeah, totally agree. All right, I had one other thought on this question of areas where people become emotionally attached, or do you want to move on?
No, by all means.
Okay. So I'm kind of queen of like uncomfortable topics, so you can shut me down if you want, but there is one area where I see a theme, and that is where people don't always want to fully disclose their financial information to their financial advisor.
Yeah.
And I want to kick off this topic by saying clients aren't alone in this. Financial advisors, I would say, are equally, if not more, guilty of it. For example, financial advisors, we're notorious for not having our own financial advisor. Like, it's uncomfortable for us to like open our robe and show everyone our finances and then get feedback, get criticized. It's uncomfortable for us. And so I just want to normalize that, and that it isn't, it takes vulnerability, humility to be just laying all of your finances out in the open for somebody else to look at and judge and give you feedback. So I just wanted to start out by saying that's normal. That's something that it's a financial behavior that makes sense, even though it's not always in our best interest. Our financial advisors, we can serve you better if you disclose all of the information to your financial advisor. And it's common, like maybe it's just a small investment account that you're playing with fund money, or it could be something larger. You don't really want your financial advisor to be privy to all of the information, or sort of you're segmenting it. But that's just one topic that I do see. I'm not sure if Drew would agree with me on that or has thoughts.
I do, and I apologize. My video is going in and out here. I'm trying my best not to be that Luddite who can't work technology. I apologize. No, Christina, I couldn't agree more. I think that it's difficult for everyone to, we say in the office, open the kimono. It's difficult for us all to see ourselves at our barest minimum. But I think that, I will say one thing that we try to encourage in our office is we try to use our own past personal experiences, our own family dynamics, to let people know that we're human beings too. No one is perfect. No one is gonna never make a mistake. And I think that we can all, once we have this understanding of, hey, this person's just trying to help me and they have the same problems and concerns and fears that I have, I think that helps the relationship strengthen. And every person, whether you're on the professional side or on the client side, should be willing to come with that level of openness. Because to your point, Christina, we can't help if we don't know it all. You wouldn't withhold information from a doctor who's trying to save your life. We would hope you wouldn't withhold information from a financial advisor who's trying to help you with that very important aspect of your life as well.
Yeah. Drew, you brought up a really good point, and that was the family dynamic side of things. That's something that I'm seeing even evolve as time goes on. Historically there was typically one person that handled finances in the family, but now there's a lot more people involved in this process throughout that entire family dynamic. Can you talk a little bit about your experiences with the family dynamic, or if there's an area that you see families struggle with that may be more emotional than the financial side?
Most definitely. And I think that we all kind of inherently know that as our society continues to evolve and our expectations and traditional roles continue to evolve, the family dynamics around money need to evolve as well. I'm incredibly fortunate to have had a very, very strong mother who is actually the founder of our practice, and she was the financial head of household. And I have a ton of clients who said, we're lucky enough to work with a lot of retired military folks in our area. That's a huge part of our practice. We're honored to serve them. Quite often, the husband was out flying fighter jets, and the wife was actually back home being the financial head of household. And so, I think communication is number one. So you have to start with who's going to be in charge, who is going to be, taking on that leadership role when it comes to managing household finances. But it never needs to be a walled off relationship. I think that everybody can benefit from having a quarterly, monthly, annually sit down with their loved ones, whether it be a spouse, their children, their parents, doesn't matter. Just to have that open communication session. And as to Christina's point, it could be awkward. It could be opening that kimono and laying bare mistakes that we've made, but at least everybody knows, hey, this is where we stand. This is where I think we can go. This is the reason why I've chosen to work with a Mariner Wealth advisor, to say they're going to help us get to where we want to go. I think communication is key, number one. Honesty, obviously, number two, because if you're we can't practice self-deception when it comes to finances, right? The numbers are the numbers. And so we can hope for the best, but we need to be honest with ourselves and our spouses, our loved ones, our children, our parents. And so I think that kind of additional layer of hyper honest communication can go a long way. So focusing on those things, I think are incredibly valuable. The last thing I'll say when it comes to family dynamics and families struggling with finance, I think comes with expectations. I think when we have that person who's in charge of the household finances, that we need to give them the freedom to make decisions, but also the leash to make mistakes. Because again, no one is going to be perfect. And I know, in my own household, my wonderful wife will chide me for overspending on dinner one night, but that's just what I enjoy doing. And so, that's the leash and the chiding that we have built. And as long as we communicate openly, as long as we're not doing anything that's going to be long-term detrimental, we have, a good understanding there. And I think that can apply to everybody. So open, honest, and leeway of communication, I think can go a long way.
Definitely. Now, Christina, knowing you and knowing a lot of your certifications and your specialties in this field, a lot of them are in regards to family dynamics and transitions and family relationships. Do you have anything to add on that?
Yeah, I love, Drew, what you were saying about how you and your wife have different spending habits. And it just made me think, sometimes I hear the question from clients like, what's the right way to handle this? Or like, what's the right savings rate? Or how are you supposed to be saving for your children or your grandchildren's education? Well, that boils down to norms. Like, well, what's normal to you? And again, boil it down further, financial socialization, like how you grew up and your idea of normal may be really different than my idea of normal or your spouse's idea of normal. So there's no like right necessarily one way to handle a lot of these decisions. And that's the beauty of, working with a financial professional that can look at all these different angles, map it out, and come up with maybe an option or two that makes sense and talk through the pros and cons of each option. So I'm queen of uncomfortable topics. I'm going to bring up another one. So another thing that I think families or couples struggle with, but it's not usually talked about, is secrecy when it comes to finances. And I think it just, is one of those awkward things that happens and it's not addressed a lot of times, but it's normal. The experts refer to this as financial infidelity. And it's basically just like the intentional keeping of a secret or fudging of the truth in some way. And the first thing to know about it is, it's normal. It's often not done with a malicious intent. It's usually a spouse, just not wanting to avoid any sort of backlash or criticism, or maybe not wanting to make a bad impression. And then habits are formed. So, it's important to realize that, usually your family members, don't have bad intentions with that. And, what we're going to talk about next, which is like some techniques to work on as a couple, can help around it.
Yeah. I think that's very interesting, is that, the financial infidelity, as you called it, it's really more so a defense mechanism than anything, because you're protecting yourself from whatever, if that is an uncomfortable conversation, or you're protecting yourself with not necessarily it being with malice.
Yeah. And it's more common than you think. I saw one quote that it was between like 27 and 70% of all couples that work with financial advisors report that it's happening, depending on the definition of financial infidelity. But
right.
It is common. And, that's one of the things that, is important to me, that I think that there are solutions to that.
Yeah. So that's a perfect segue into this, talking about the financial infidelity between couples. What are some more dynamics between couples that you find in this space?
Yeah. So I do have some ideas about it. I love the idea of setting a date to talk about these things. These financial topics are typically not something that comes up casually. It almost needs to be planned for. And so setting a time, I call it a money date, to talk about certain topics. And you can make it as formal or informal as you want. You can have a glass of wine or not. Maybe that would make it worse. But you can set, topics to discuss, such as like spending limits. If that's something that, has been an issue in your family, talk about it at a neutral time where there's not tension or some sort of conflict that you're working with, but you're looking at it as a whole, proactively. You can talk about debt limits. You can talk about, one of the things that I want to do with my fiance every year is to review our budget, our like cash flow report and our budget sheet every year to see, what changes are we seeing? Are we on the path that we want to be on? That sort of thing.
No, that's great. So I was married a year ago, and that was one of the things that, we sat down for a few days after, a little bit after the wedding, after the honeymoon phase, and we sat down and really just kind of exposed everything of, where we are, because, at this point moving forward, it not only impacts us, it impacts, our family and our futures. So I think that is such an incredibly important topic as well. I was actually talking to a colleague recently, and we got into this conversation of talking about the different dynamics between, us and our spouses. And it was just super interesting to hear somebody that has a very different perspective on the dynamic between them and their finances. So it's, that's something that's super interesting.
That's so, Christina, it's funny you mentioned having a glass of wine, because that's kind of our recommendation for folks when they have to make a big financial decision. We tell them to go home and have a glass of wine about it. But my dad, so this is actually true. My dad doesn't drink. And so he would intentionally invite us on walks because he likes walking. And it's an opportunity where your body is doing something that's meditative in nature, and you're able to actually kind of, you don't have to sit there and, what do I look like? And you're not thinking about yourself. You're just thinking about the conversation because your body is doing something else. And so, my better half and I, we like going for walks in the morning, and that's where I find we have our most productive financial conversations, because we're able to be honest with each other and not have to worry about, do I need to show this document, or do I need to share this piece of information? You're just kind of in a mode of being willing to communicate because you're the only two people out in nature at 6:30 in the morning, and it's beautiful. And that's a really, really neat way that I think you can be honestly communicative, but not have to feel like it has to be this formal sit-down meeting. Now, for some folks, the formal sit-down meeting is important, without a doubt, and that's more valuable. But try on whatever works best for you. But Christina, I think you hit the nail on the head. And every person that's done this before has regretted it in a relationship, and that's the surprise financial talk. Where I joke all the time. It's always like 8:45, and you had a late dinner and a terrible day at work, and you're just trying to relax and shut your brain off. And you're the person you love most in the world goes, "Can we talk about something serious?" And that's the last thing you want to hear. So I think that you're right. For some folks, putting it on the calendar and being very intentional about when you're going to talk about those things makes a big difference. But I do think sometimes it can be spontaneous, but not necessarily an attack. And so I certainly think that's a positive way to think about it.
Right. I love that. I think that it's so important to find your own outlet. As you mentioned, to going on a walk might not be the best for some people, having that sit down meeting. And obviously every single person is different. Maybe there's a combination of the two that, you can find with your partner, but finding your own outlet in order to have this conversation.
Yeah,
Absolutely.
I love that idea of the going on a walk. I had one other, I think, important factor that I'd like to bring up on this is we naturally in our partnerships have one person who is more familiar, more comfortable, maybe more dominant in the financial area than the other. And sometimes that's pretty extreme. Like maybe one person knows a lot about it or does everything, and the other spouse doesn't, somewhere on that spectrum. But the more removed that non-financial spouse is from the active management or decisions or the discussions of personal finances, the more grace and time they need in order to even formulate a thought, because they may feel really uncomfortable talking to you about finances, even though they're your partner. Maybe they've never really had an opinion or really don't understand what you're talking about. And so for that quieter spouse or the spouse that doesn't normally speak up, give them a lot of grace and time to process their thoughts on the financial topic. And it may require some awkward silences. Like I find that clients sometimes just need that space in a conversation to collect their thoughts and in order to even get anything out. And when they finally do verbalize a thought, respect that. It may not be, anything revolutionary or a strong opinion or anything like that, but just any sort of feedback that they're willing to bring to the table is a good start.
Right. Definitely.
Oh yeah, Christina, I have to jump in because I just keep thinking about my own personal life and relationships while you're talking through all these things. The best piece of advice I can give, and I'll put on my amateur psychiatrist hat to cover up my bald head, is whenever that more emotionally vulnerable person is ready to share, I have always found it is incredibly, incredibly helpful to as the receiver of that information say, do you want a shoulder? Do you want feedback, or do you want to let me know how you feel? Because quite often, I mean, every relationship has this dynamic where there's the person that's maybe the more in charge of finances, maybe they're more type A like me, and they're always looking to try to find a solution to help their loved ones or their clients, whatever that might be. And sometimes that person just wants to be vulnerable and share a concern or a fear or a thought, and they don't necessarily want you to solve the problem. They just want you to listen. And to me, that just drives me crazy. I can't handle it, but I'm learning. I'm learning very hard. I'm learning. It's a hard lesson to learn. But to just be that shoulder to listen, you don't necessarily have to say a word, and be comfortable with that awkward silence, as you say, because when both parties are able to communicate without fear of judgment or solution immediately thrown back at them, it's much more positive. It's much more positive on the outcome. So I think you're exactly right.
Yeah. So we talked a lot about how to have these conversations. And, I want to go back to something that you mentioned, Christina, of, setting spending limits. Are there other pieces of this conversation that you would recommend people talk about, or how do they start this conversation?
Yeah, so I think that one of the most powerful techniques to get to know your spouse better in terms of where they're at with finances, what they believe in, understanding their habits with it, is to understand their money story. And what I mean by money story is it's learning about your spouse's financial attitudes, what they believe about money, their capabilities, their behaviors. It's this ongoing self-reflection that helps us become more mature with money matters. And so this is so simple to do within spouses. You can ask your spouse questions like, what was your most significant memory of money? Or what financial roles were shared or not shared between your parents? You can ask, what financial values within your family are you most proud of? Or what financial mistakes do you see repeated through the generations? I'm pretty sure that you're going to learn something new about your spouse, no matter how long that you've been married, just by asking each other those questions and having a discussion about that, being curious about each other's past and how you look at things now. Again, the solution, just like Drew said, you're not after finding a solution. It's about open discussion.
Right. I like that. Those questions that you just mentioned are awesome. I really like the direction that you went with that.
Oh, thanks.
So I'm going to move to, I'll say, the elephant in the room, which is the current market climate. There's been so much volatility in the market, which obviously is going to make people very emotional about their financial situation. So Drew, I'll direct this at you. What are some ways that people can prepare themselves for volatility, and any ways on how to deal with the volatility as they're experiencing it?
Sure. So head in the sand, just ignore. I'm just kidding. Just kidding. No, I honestly think that, the setup of Marital Wealth Advisors is an incredibly positive one to answer this question, because we're a planning first organization. And so if you're a client of this firm, if you're watching this webinar, if you're considering becoming a client of this firm, know the plan first. And there are folks who obviously have wealth that's beyond what they probably want to spend in their lifetimes. Fully good for you. That's great. For the rest of us, I think sticking to the plan makes a lot of sense. And so, just like in everyday life, when something goes awry or we have a challenge that faces us, we're trying to make plans. We're trying to make expectations. We're trying to make opportunities happen. And I think that it's very valuable to stick to the plan that you've set out. So sit down with your advisor and say, hey, we have a hotter than normal inflation number right now. Can we stress test my portfolio against long-term inflation to see what that might mean? Now, do we all logically think that our current climate is going to exist forever? Probably not, because remember, this time is different, just like every other time. But I think it's important to, number one, stick to the plan. From a portfolio standpoint, I think it's important to know what you own. And that is just incredibly vital. It's something that we preach here in our office every single day. Again, your Marital Wealth Advisor is going to be able to explain, hey, this is the reason why we own this piece of the portfolio. This is the purpose of this portfolio strategy. This is the reason why we own X, Y, Z. It doesn't particularly matter. I think feeling educated leads to confidence, because obviously we're just trying to overcome uncertainty in uncertain times. And so I think that if we, number one, stick to the plan, and number two, recommit ourselves to that educational confidence, we can have a lot more, certainty in our lives Obviously, everyone lives in this 365-day 24/7 news cycle where every single piece of information is instantly added to the stresses that we feel. Obviously, you can't tell because I'm sitting down, but I could probably work out a little bit more. But I always use this analogy that if I went to the gym and worked out every single day for 360 days in a year, and then for 5 days a year, I ate like a pig, I was just a terrible, terrible glutton, I would still probably be in pretty good shape. And yet we as humans are so recency biased, to Christina's point earlier, that we forget that we're probably going to live long, long lifetimes. The number of centenarians that are going to exist in the United States in the next 20, 30 years will hockey stick. We're talking about an order of magnitude of people living to and past 100 years old. And if you're sitting here and you're 67 years old and you've just recently retired and you see the S&P volatility that we might be experiencing right now, or the CPI numbers that we're seeing coming out every day, you probably get nervous. But you have to remember, if you worked out every single day for that year, you'd probably be in pretty good shape. You're going to be retired for a long time. The planning that we do, the expectations that we make, that's built for the long term. And so stay committed to the plan, stay committed to understanding what you own and why you own it. And that'll get you through those 5 days a year where things don't go particularly well, and extrapolate that over a longer period of time. So that's the advice that we give to our clients. Know what you own, stick to the plan.
Yeah. So I'm even going to take a step back, and you're mentioning sticking to the plan, but I'll go one step further back and say, have a plan. And I think that that's huge. As the evolution of the industry, evolves, their planning has become so much more prevalent, and so many more advisors are offering planning. Historically, a lot of advisors were just asset managers or investment managers, but having a financial plan is so huge because it encompasses every single piece of the entire wealth picture. So that's incredibly important, of staying on top of things, because you can be prepared for these what if scenarios of what's going to happen.
Jude, I couldn't agree more. I think the plan gives us context for decision making. The plan sometimes gives us permission for decision making. And there's a terrible, terrible trope in the wealth management industry. It's that people who need financial planning necessarily can't get it, and people who can easily get financial planning don't necessarily need it. I think that, to your point, Jude, is gone by the wayside. That is a trope. That's an aphorism of old. Every person, regardless of your net worth or your wealth or your income status, needs to have a plan in place, and they need to understand why they have it, because it's giving us context for decision making. We have quite a few clients who, thankfully, through military pensions or government pensions of some kind, they're going to be financially okay. And in good years, we use the plan as permission to take the trip to Disney World, take the grandkids on the cruise, go do what you want to do. Because there will be lean years, just like everywhere else in life. There will be good and bad. And I think that if we're able to use the plan to make positive decisions, we can certainly use the plan to make decisions that might be a tightening of the belt, or a different look at that period of time. And so I think your point, number one, have a plan, is super important. But don't be afraid to reach out to your advisor and say, hey, can we run through it one more time? Can we make sure that it's updated with my most recent information? Because obviously it's just giving us that really, really valuable context for decision making.
Yeah, you made a great point of taking advantage of these things, going on that trip or whatever it may be. Making too many sacrifices for your plan, you're just missing out on life. So, you want to make sure that you are able to, on the flip side, make the sacrifices in order to do those special things that you would like to do and spend that additional time with your family.
Yeah. I'll talk one more time. I promise I'll shut up. But I think it's important. One thing that we have really started to focus on in our planning here in the office is kind of the parabolic nature of retirement spending. And I won't draw a parabola in the air like I did with my hand just then. But most of us are going to take the trips we want to take and do the spending we want to spend earlier in our retirement years. I do have some clients that this applies to, but not many, who are doing all of those same activities at that same level of spending well into their 80s and 90s. And so I think that it's okay to have those experiences while you're healthy enough and have the family with you and the ability to do them. There's nothing wrong with that. And the plan gives you that permission, was the wrong word, but it gives you that confidence of being willing to do it. And I think that's why relying on it in years of volatility is so valuable. because you said, hey, I believed it and I understood it last year. I'm still going to believe it and understand it today.
Definitely. Now, I'm going to, staying on this topic and thinking about the planning aspect of things, I'll direct this question at you, Christina. What are some techniques or tools that you've seen that help clients improve their success in a financial plan?
Yeah, so I have a couple of different answers for this, but I want to reflect on what Jude, you and Drew were saying, which was really the solution to the market volatility issue, which was to have a plan and stick to a plan. You said it much more eloquently, but really those are the solutions. And what I want to step back and add a little flavor to is back to the topic, which was managing our emotions and investing. And it's hard to just say, ignore those emotions. It's normal to have a plan and still freak out about it. It's normal to question it. And so, I think that it just helps to know that there is this tendency for humans to want to take more risk during good times and then take less risk during bad times. It's easy for us to say, and that's why you're working with a financial planner, is because they're sort of the yin to your yang. They're like the steady to your unsteady. But it's helpful to have that partner in order to, bounce your emotions off of, so that you can get that response from Drew, that steady, reasonable, logical response. And then the other technique I'd throw out is one that I've heard Dr. Charles Chafin give, which on that market volatility issue, which was, he says to play out the possible scenarios that could happen in the market. What do you, client, what do you think the best case scenario would look like? What does the worst case scenario look like? And what does the middle of the road scenario look like? I think just sort of exploring those extremes can help, because, our mind can run wild with, well, what's going to happen? I don't know. But spelling that out and going it over with your helpful, the game plan of what you would do if one of those scenarios would hit. So that's sort of going back to the volatility in the market. But in terms of creating financial success, I think that exploring that money story with your spouse can be really helpful, because
seems like we're getting a little bit of lagging. Give us just a second. So I guess what Christina was mentioning is, having conversations about those extremes. So, that very best case scenario, very worst case scenario, and that middle ground. So that way you're covered on all of your different bases of this. And that's something that we see, you think about a Monte Carlo scenario, that's exactly what that is showing. It's showing that best case scenario, showing that worst case scenario, showing that middle ground, and allowing you to be prepared if these different what ifs happen. And so that way you can find your correct path along that road.
Definitely. I mean, Jude, to your point, I think that the plan just reinforces those different paths that we can kind of see. Well, we always try to counsel our clients on this, best case, worst case, middle path scenario is, what is likely to happen? And, you don't need a Monte Carlo simulation to say, are the companies that I'm invested in, are the positions that I have my future finances tied up in, are they likely to exist 5, 10, 15 years into the future? Are they likely to be disrupted in some way that I think the investment might not be there for me in the future? And I think if we take a step back and think about it unemotionally, quite often the answer is yes. And, generally speaking, we want to keep that positivity going in the market, in the marketplace. And so for the most part, I think that, it's an aphorism, but unfortunately, long-term investors do well because returns come in time, not on time. And quite often, we just don't like the way things are going at the moment, but we would like the way they go over a longer period of time. And the plan is what's going to reveal that for everybody.
Definitely. Definitely. So we have about a little less than 10 minutes left. So I'll open this up to any questions that anybody has. Feel free to submit them inside of that Q&A that's there. If you have any questions specifically for Drew, for Christina, or just in general, feel free to ask them there. I will say that we have gotten a few questions specifically about the market and some investment advice. And what I will say, this is just a little plug for our Crystal Ball webinar in January. So that'll be our January webinar where we'll have Jeff Crumpelman as well as Katrina Radenberger from Mariner are going to speak a little bit more on the outlook and the crystal ball of the investments and of the market. So definitely make sure that you are attending that one as well, because that is always a really great session. We usually do that twice a year in January and in July. And so they give their insight and Mariner's take on the investment and on the forward-looking future of the market. So another question that came in is just providing a written list of some financial questions to ask spouses and partners. And I'll see if we can do that. But Christina, would you mind just going over a few of what some of those specific questions are?
Yeah.
I know that you mentioned some in the past, but
I'm going to turn my video off. I'm experiencing some connection issues. My apologies. So I can follow up with those questions that I specifically named. One other idea that I would give you is to look up an exercise called the money genogram. It's a fun exercise for spouses to do together. And it's basically drawing out a family tree and mapping out the financial relationships that family members had in your life, and sort of mapping out any financial events that were formative for you, some areas of struggle, or maybe people that you looked up to, mapping that out and having a conversation about how those things connect can be really fun, and you learn things about yourself and about your spouse.
Awesome, thank you. So one of the other things that has been brought up is, do you have any recommendations for any books or podcasts or anything in regards to this topic? And I can speak to myself. One of the books that I had read a few years ago that really got me thinking about this subject was The Behavioral Investor. And I think that is a really interesting book, and it's something that really starts to spark my interest in this topic and allowed me to change the way that I think about how to make these different financial decisions. So, from my perspective, I will recommend that.
Most definitely. I think there's the beauty of living in the internet age, as we have struggles with Zoom today, is that there's any number of great resources out there that you'll really enjoy. I'm a huge fan of Planet Money. That's a daily podcast. They actually have 3 or 4 different internal channels there. Some of them deal specifically with topics just like what we're talking about today. Highly recommend just kind of starting to explore, because I think that you'll find if you just listen to people talk about technical charts all day long, you're gonna, unless you have a problem sleeping, and then you'll be perfectly fine. But I think from a behavioral finance standpoint, it's actually incredibly interesting to hear people talk about economic studies, because what we can learn from those studies that applies to our own investing, our own investing biases. That's where a lot of Christina's research and dissertation information comes from. So I try to dive deep on anything available to me in the NPR world, for sure. Jude, I know we had some other questions that were submitted ahead of time. Would you like me to take just a general swing at some of those?
Yeah, of course.
Sure. Well, I had an interesting thought that occurred to me, which is rare. So, I don't actually have a lot of very interesting thoughts, but many of the questions that we got, the topic of this talk today was very clear. How do we avoid emotional investing? There was a guy, at the computer, very angry in the picture, right? And a lot of the questions that we received ahead of time dealt with what I would call very fearful, concerned questions that really didn't have anything to do with kind of the topic of today's conversation. And I'm not saying we're not going to talk about it, but I think that reveals the psychology behind how the average person feels today. And I want you to know, if you're submitting those questions, you are heard. You are not being ignored. You're not being, not paid attention to. I think that there are a lot of people out there who will tell you, well, this is what I think the future is going to be, and these are the decisions that you need to make based on what I think about today. And I think if we can take a step back and just say, what is likely to happen over the long term? what is likely to be the case over the long term of my plan? I think we can feel much less emotion and then much less fear in general about what our near to intermediate term future looks like. So, some of the questions submitted today are pretty negative. It's, what about this looming recession? Guys, too late. We've already had 2 consecutive quarters of negative GDP. It's too late for the looming recession. We were in it. And the irony of it all is that we need to just be somewhat more calm, understand that the sky is not falling, the world is not coming to an end. It will continue to spin every single day. And if it doesn't, then, this is much less of a problem for you. I assure you, if it stops, then we've got no more problems to worry about. So, all we can do is try to maintain a positive outlook, but obviously be cautious in that positivity. I don't think there's anything wrong with that. So to some of the great questions that were submitted, I would say, go to your advisor, say, hey, this is a concern that I have. Can we look at my plan together, how that specifically addresses this concern? Because just, kind of typing into the ether about fear is not going to alleviate your fear. You're only going to be alleviated by getting that certainty that the plan can provide.
Yeah, I think that's huge. Just having those prepared questions to your advisor, because I see that, all too frequently is that, clients are just there expecting the advisor to come up with every single solution to what they're seeing as far as the numbers go. But there's so much more to wealth management than just the specific numbers. So making sure that you're going to your advisor with those specific questions is going to be huge. And that's how your plan is going to be formulated and, tweaked to yourself and to your own situation. So I think that was all of the ones that came through. So Drew and Christina, thank you both so much for your time today. This has been, a really great conversation. I love having these kinds of conversations, and, this won't be the last. As I mentioned before, for all of our attendees here, thank you all so much for joining as well, for taking this hour out of your day to spend that with us, and, making sure that you are jumping into Mariner's webinars section of our website, and that has all of our previous webinars, also where the recording of this will live if you want to share this with anybody else. And then in the future, we will have our Crystal Ball Outlook in January, so keep an eye out for that as well. But Christina and Drew, thank you both again, and thank you everybody for attending.